Hello, everybody. Here we are today with another must-see European Resource Bank event, a series of live streaming seminars on current hot topic about politics and economics. And I have to say, hot topics like the temperature here, hot like the temperature here in Rome today, and not only in Rome. Let me remind you that we are broadcasting live on Zoom and also on Facebook the webinar will be also uploaded on the Austrian Economic Center and Competere's official platform. So you can enjoy them one more time after or if you miss it. So with no further ado, let me illustrate briefly the topics we're going to discuss today with our excellent guest. The title of the live talk is the abolition of tax competition. And a lot of things, of course, will be discussed today, but let me say that there's one major event that has recently taken place that must be mentioned before starting the discussion. And the event in question is, of course, the last month G7 meeting where the finance ministers from the group of 7 rich nations reached a landmark accord, a deal, backing the creation of a global minimum corporate tax rate of at least 15%. An arrangement that, of course, could be then form the basis of a worldwide deal. But we will discuss also about the chances that that will become a real deal for worldwide, of course. In recent years, we have heard many times politicians, but also economists calling for a global tax for corporation, mostly for the biggest ones, let's say, and also a digital tax. For example, a global progressive taxation has been often advocated by the IMF managing director, for example, Mr. Kristalina Georgieva, who was also present at the meeting of the G7. So the proposal comes under the banner of shaping a safe and prosperous future for all, and is also supported by arguments such as the level playground for all, building a strong, sustainable, balanced, and inclusive global economic recovery after pandemic, and also transformative effort to tackle climate change and biodiversity loss. So today we will investigate about the scenarios, and also we're gonna to fact check if all these statements are true and these goals can be achieved through a global minimum tax for corporation. So as you could see, there's a lot on the line in today's debate. Finally, let me introduce our speakers. Today we will have Michael Jäger, Secretary General of the European Taxpayers Movement, Taxpayers Association of Europe. Then we have Mr. Krassen Stanchev, Professor in Public Choice, Macroeconomic Analyst, and Public Sector Economics at Sofia University. Then we have Mr. Daniel Mitchell, a public policy economist based in Washington, D.C., and Mr. Anders Ydstedt, advisor at the Scantech strategy advisor to major Swedish industry and business organizations. So let's start with our first speaker, Mr. Jäger, who would like to give us a brief comment on the topic that we're going to discuss today. And please, Mr. Jäger, now the floor is yours.
Thank you very much. I think it's a very hot topic, not only because of the weather, but I'm now working since 30 years for the Taxpayers Movement, and it was one of our nightmares that there will be a bland tax harmonization and the end of competition, also tax competition. So we have really to fight and to point out why competition is so important. And first, fair tax competition doesn't need worldwide minimum tax rates. So it's not necessary. For sure, everybody has to pay his taxes. But for this, we do not need harmonized tax rates. So we have a different situation in Bulgaria, in Romania, in Cyprus, in all these countries. If there's a minimum rate of 15, why anyone should invest in Cyprus, in Malta, in Bulgaria, if they can invest in Paris or in London or in Germany? So that's a big problem. So taxes are also a location factor, and it's not only unfair if you have low rates, if you can finance your budget out of these low rates too. And in many countries, such as Germany or Austria, we have really high tax burdens already on enterprises and people. So that's also clear. You can check OECD figures. You don't have to use our taxpayers comparisons. So feel free to check in the web. You will find it that both corporates and also private people are really taxed on a high level in most countries, in the developed countries. And if you look now to the G7 and the change of America, US, why is Biden and Yale now in favor of a minimum tax rate worldwide, and 15% or even higher? Because they want to increase their own corporate income tax in their country, and they are afraid to lose corporates. Corporates will leave because of the increase of tax pressure in US, and that's why there's a change. And they have a huge debt, and they think if they increase taxes worldwide, less corporates will leave US, and maybe they will have more revenues. But I strongly believe that the increase of taxes will not lead to higher revenues, because this is not true. And what is now happening is nothing but a kind of tax cartel, tax trust. If we as private entrepreneurs would do the same, we went to court, because it's eliminating competition. So it's really also against market economy. And what is completely left out in this discussion, that minimum tax rate 15% is just the beginning of the harmonization of the consolidated corporate tax base. So that's all the aim on the European level. And it's so funny that 15% is the exact rate of Germany's corporate income tax. And if we have a change in the tax base with the same rate, German corporates will have a higher tax pressure and have to pay more taxes than they pay today. And that's really a big problem. And also the question how to boost and promote startups and investment if you have a wanted stimulation. So that's for us a big problem. And to end with two important sentences from my side, those who are demanding minimum tax rates, so should also be fair to say what should be the maximum tax rate. If you have a small, medium-sized entrepreneur in Germany, average person, you pay more than half of your income as corporate in taxes. So is it fair if those people, because at the end, it's not the rich, the big corporates, everyone will have to pay this tax rate. This increase will be paid by everyone. So I think it's not fair. So for us, it's clear that at the end, taxes only be levied on profits and not turnovers or sales, like it was planned on the digital tax. Because this is really the end. If they decide 50% independent of the result of the corporate, so we have to make clear that it's only we're talking about profits and deductible debts. And we have to fight for freedom, and it's high time to start a global campaign showing that tax increase will not lead to higher tax revenues. Thank you very much.
Thank you, Mr. Jäger, for your words and the points you raised in your introduction. But now I would like Barbara to give a remark. I'm sorry that I didn't leave you in the room first. Maybe it was better for the schedule, but now please go ahead.
No problem at all. Thank you very much, Giacomo. Since we are having the European Resource Bank meeting in Rome, it's absolutely fair that you do this first with our partner, the European Economic Senate, and with Michael Jäger, who has been a long-standing partner with the roadshow, but especially with the European Resource Bank meeting. And it's a privilege for us to also have Krassen Stanchev with us, because he was the first one to host the European Resource Bank meeting long time ago, ago in close to Sofia in the mountains, and I think we all have fond memories of that first meeting. And now we host a second one in Rome, unfortunately digital, so next year it will definitely be the live one. And by announcing that, I also would like to thank our partners and sponsors, especially the Kriebel Foundation, who has also been very, very interested in all the tax work that not only the European think tanks are doing, but in the work that think tanks across the world are doing with regards to tax competition and to analysis of taxation. And last but not least, I would like to point out a book that we have published in 2013, and you can see the title. The title is International Tax Competition, Race to Growth or a Race to Bottom. So you can imagine this battle has been going on actually for decades. And back then we were thinking that we had made some advancements when it came to at least lower tax rates on the corporate level, when some countries implemented their flat taxes on this level, but unfortunately the pendulum is swinging back again. So I can only tell everybody that we need to have a close look, that all the European think tanks, but also international think tanks on this side have to cooperate and coordinate their work. Otherwise, I think we will exactly be where Michael Jäger has pointed out, where the race will go not to the bottom, but to the growth, and we will all end up paying much more taxes and many more taxes than we do these days. So back to you, Giacomo, and thank you very much for hosting us in Rome. We are looking forward to seeing you live next year, everybody.
Yes, we hope the same, of course, that next year will be possible to host the European Resource Bank here in Rome. It will be great to see you all. And also hope that could be the chance, Barbara, for you to publish a new edition of the book, maybe. After this proposal, after the deal of the global minimum tax, will be the perfect time, you know, to push those messages in the debate, of course, in the public debate. So let me proceed with the questions, with the discussion and our experts. I will go first with Mr. Stanchev, then I'll go to Mr. Mitchell, and then I'll make a question to Mr. Ydstedt, and let's see also if Mr. Jäger can join us later on, I mean, during the discussion. So a first question to Mr. Stanchev. So Mr. Stanchev, we heard many times also during the G7 meetings that one of the main goals of the minimum global tax is to tackle inequalities. Do you think that the G7 leaders are going toward the right direction in order to achieve this goal?
I think the entire sort of issue of responsibility of the richer countries, or high-income countries, for the situation of the low-income countries has a very interesting intellectual history, but it has never been linked to taxes. I just finished the research on the history of fighting poverty becoming an international policy priority. And most of it happened with some sort of a conspiracy between the communist countries and African countries, most corrupt countries in the world. So what happens now is that we have an extraordinary hypocritical proposal by G7. Because on one hand, you know, they say, you know, we are for inclusive growth and we will help the third world or the low-income countries to grow. But in fact, most of the low-income countries have to increase their effective tax rates, which basically means that they will have lesser growth, and the lack of international competition will hamper their road to prosperity. And what is probably second option, these countries are anyway indebted to the richer countries at the moment. So they will line up for more credit or for foreign aid or to bail out programs by International Monetary Fund and development banks. So the proposal is completely hypocritical in this respect.
So thank you for your answer, and I'll be back to you after the first round with a second question. Now, I'll make the next question is for Mr. Mitchell. Thank you for being here with us from the US, I guess. And I would like to ask you something very basic to start. Then we can go further in the details. So, but basically, what are the implications of such policy, you know, of a global minimum tax for the citizens and also for the business at global level?
The most important thing to understand about this G7 initiative is that it's part of a long-running project on the part of high tax governments and international bureaucracies like the OECD. There has always been a hostility against tax competition by politicians who, of course, want more power and control over the economy. And they've used bureaucracies like the OECD and now the G7 to try to advance their policies of restraining and restricting tax competition. And what makes this really offensive is that it's contrary to even the research of economists at places like the OECD and the IMF. Economists across the board understand that high taxes on saving and investment and entrepreneurship are among the worst ways in terms of economic damage, the worst ways of trying to collect revenue. And yet, what are these politicians doing? Because they want to try to undermine tax competition, they're putting in place this global tax cartel, or at least they're trying to, for the very simple reason that the politicians want to make it easier for themselves to raise revenue, to increase spending so that they can buy more votes with other people's money. And probably one of the most worrisome things about this initiative is that if they put in place any type of tax cartel with this 15% minimum rate for companies, there are two things that you can very easily predict. The first thing is that the 15% rate will then begin to increase, because once a cartel is in place, and if the cartel is successful, it's in the interest of the politicians from all over the world to then say, well, let's raise it from 15 to 20, from 20 to 25, from 25 to 30. It'll never end. But then perhaps even worse, the second prediction that we can make is that if they successfully implement a global tax cartel for corporate income, it's simply a matter of time before they try to impose global tax cartels for personal income, for capital gains. There's already, of course, a tax cartel in the European Union. Your value-added tax rate has to be at least 15%. But we'll see other types of global tax cartels on dividend income, you name it. The goal of these politicians, of the OECD for decades, has always been to figure out ways to extract more money from the productive sector of the economy. And if we don't stop them here, they'll simply capture this additional power, and then they'll use that as a springboard for even higher taxes in other areas of public life.
So, yeah, well, thank you. And so it's my understanding that in your opinion, you know, the fair way to increase revenue for government is just to let economies and businesses grow. Is it correct? Is a good interpretation?
My view on public finances is that governments already are far too big. There's a lot of academic and scholarly research on what is the growth maximizing size of government. And that research pretty conclusively shows that you shouldn't let the public sector consume more than about 20% of an economy's output. And of course, if you look in the United States, if you look at various European countries, you know, even the so-called small government countries have government spending burdens well above 30% of GDP. And in places like France and some of the Nordic countries, governments are consuming more than 50% of economic output. And so when you have a very big burden of government spending, it of course makes sense that politicians are very anxious to try to figure out new ways to raise revenue. But if you start with the assumption that government's too big, then the last thing we should ever do is give politicians new ways of collecting more revenue. It's sort of like trying to cure an alcoholic by giving him the keys to a liquor store. It's exactly the wrong approach. Governments should not have more money. Government should have less money. And that's why tax competition has been one of the few good things that we've seen in international economic policy. It's why we've seen tax rates come down. I would like to claim that politicians around the world over the last 40 years have been lowering tax rates because they were reading my studies. No, they've only been lowering tax rates because of the pressure of tax competition. When Reagan and Thatcher slashed tax rates, other countries had to do the same thing, not because they wanted to, but because they knew they would lose jobs and investment to other countries. We need to keep this liberalizing force of tax competition alive. It's our only hope if we want to try to keep politicians from taxing and spending our economies into Greek-style fiscal crisis.
Thank you. Thank you also for giving us an historical perspective of what happened in the last 30 years, especially with taxation with fiscal policies. So I'll be back to Mr. Mitchell in the second round, and now I'll move to Mr. Ydstedt with a question for him. So Mr. Ydstedt, the G7 meeting evoked a sense of deja vu where rules for the world are decided by a selected group of developed countries. So my question is, what could be the role of other developed or underdeveloped or developing countries in the game? And I'll make you some example of, I mean, developed countries or developing countries like, for example, Ireland or Hungary, or there's a bunch more out there that rely on better fiscal rules and also smaller bureaucracies. How can a global minimum tax can be accepted and adopted by these countries that rely so much on a lower taxation and a lower government and a smaller government, sorry.
Thank you all for having me today. Some of you have already heard I used to say the same things at these kind of seminars on taxes. But I think what we could do, I think I start with actually what I think could be done. And I think in the European Union, we still have a veto, the right to veto bad tax issues. And just one member state can have the right to veto tax proposals. So I think countries like Austria and Sweden and Hungary and so on, if we don't like the proposals like from G7, there is still the right to veto, but there is a fight in the European Union and the Commission. They really tried to change this possibility. They proposed that we should have what they call qualified majority voting, and in that case, other countries could form a cartel to use new tax systems and higher taxes and so on. But as long there is a veto in tax issues and tax proposals in the European Union, we should fight for that. And I think it's important for us, friends of lower taxes and tax competition, that we unite in this campaign for the right to veto on tax issues. And it was not very long ago that there has been a long discussion in the European Union about public country-by-country reporting, where they say that multinational enterprises should publish in Europe what they pay in taxes and the results and so on. And that is, of course, it's a bureaucracy problem. It's costly, but it also is a disadvantage for European companies. They have to show what their real cost is for their competitors and so on. So the business organization has been fighting this bad idea, and it has been blocked as a tax issue for many years. But now the Commission moved this issue from a tax issue to accounting issue, and on accounting there is no veto, right to veto. And I think we will probably see the same ideas from the Commission on other issues coming on. But it's really, we have still in the European Union this possibility to veto bad ideas. In the last case, it was Portugal who moved up this country by country reporting on the agenda. But I think it's important in our countries that we get our friends and talk about this, and we have the right to keep tax competition, as long as we have this veto.
So you think that they will finally put the veto on that? I mean, in a discussion within the European Union, of course.
If we have the possibility, and we still have it, countries like Sweden and Austria could block this kind of ideas from G7 and perhaps G20 next month and so on, and we should definitely use it. But I think a lot of people are not aware of this, and it's important to tell politicians in our countries that they have to fight for their right to decide where to tax. To what you say in the US, taxing without representation or something like that. Then perhaps something like that, and the same goes in Europe, as long as we have a veto.
Thank you, Mr. Ydstedt. I see that Mr. Stanchev would like to, to say something more about
what
this.
Anders what Anders is suggesting is already happening. During the meeting in England, the Irish Prime Minister said that they have reservations, his country. Today, the Finance Minister of Poland, Tadeusz Kościński, said that they will veto, and that he is talking to his colleague in Hungary to veto as well, because they have 9% flat tax on corporate income. So I am leading a campaign in Bulgaria, that Bulgaria with 10% flat tax on personal and corporate income is also in a position to impose a veto within the European Union. So I think, within the European Union, it won't fly. The problem is that I have a personal problem with IMF managing director, who is Bulgarian. Second, we were colleagues, about 30 years ago. And then she was even working for me as a member of the Constitutional Assembly for a month as my advisor. So, and I feel ashamed, but I see the interest of IMF and the World Bank and development banks. They would like to have more job. And that's why they invite everybody to raise taxes and to finance, things that are unmeasurable, like, they're fighting the biodiversity losses and the climate change. So at the same time, because these things are not calculable in principle, one should take into account the very fact that in the last 30 years, basically the corporate income revenues of all the countries of OECD have gone down below 3% of GDP as a revenue. And there is only one country which has, of OECD members, which has higher percentage of revenue, which is 3.5% of GDP from corporate taxes, and that's Canada. And this is only for 1 year. This is the last year. So with 3%, income, they cannot do anything, because the level of indebtedness, government indebtedness, of all these countries is approaching, taking Japan out, because it's an extraordinary case. But in all these countries is approaching the average the common denominator, is approaching 100%, except for Germany.
Yeah, let me also add that a point missing in a G7.
I mean, you know about Italy, of course.
Yes, yes, of course. And I would like to point out that a point missing from the G7 meeting is that they didn't say actually in a specific way how they would use the revenues from the corporate global tax. They just say a bunch of statements about, you know, biodiversity, inequalities, but there are no specific politics that they actually highlighted or that they underlined in their session, discussion session.
In 2017, Italy corporate tax revenue was 2%, 2.1% of GDP. Bulgaria with 10% tax, you know, had about 2.3 in 2017% of GDP corporate revenue in the, so, and Bulgaria is the only country in the European Union where international companies are paying all the taxes required by law. Another hypocritical thing here is that Google, Amazon, Elon Musk and others, you know, they said, oh, that's a very good idea. And this is a very, very good idea. And Dan can explain why. This is a very good idea because they had taken their advantage from low tax jurisdictions. They have their market shares in the global market and all the competition will be blocked with higher taxes.
Yeah, they're trying to defend their positions, let's say that. I would like to ask Michael Jäger if he's still with us. Okay. Can you speak, Michael? Yeah, I have a question. So for you, I skip your question now. If you're with us, I would like to ask you this. There's a lot of people, politicians, economists, activists out there in Europe, and they're all calling for government to stop fiscal competition for various reasons. It is a big topic, and also it has been a big topic in the European Union in the last years. So what do you think is the impact of abolishing tax competition in the European Union, especially for taxpayers?
I think there will be a negative impact. I tried to explain. We had the story with the digital tax that Google, Amazon, Facebook will not contribute, will not pay their fair taxes. What is not true? If you go to our European webpage, we can show you what they paid. We can discuss if it's high enough, but the approach then to say, listen, these corporates have no cost for that reason. We can tax sales and not profits. So this is a huge misunderstanding of a fair treatment of taxpayers. And if you see that more than 80% in Germany are small and medium entrepreneurs who do not pay the corporate income tax, they have already a huge high tax burden. So we will start now with the so-called big players officially with some burdens, 500 billion, whatever, but then it will be going down. There will be soon a minimum tax rate of 15. And what Dan said, if you have such a cartel, it's easy to say, listen, because it will not work. They will have not an increase of revenues. Okay, it didn't work. For that reason, we increased to 20%. If this will not work, worldwide 25%. So it's the wrong approach because you must earn something that you can tax it. And if the state is taking money out of taxpayers' pockets, and what was also mentioned, if you look the state relation now in Germany is 51% of our gross national product is related to the government. So at the long run, we will have a state-blamed economy. And we saw it in the eastern part of Germany, and we saw it in the former Soviet Union that it didn't work. So what is going on now with this aim? We need to do something against unemployment, youth unemployment. We have to do something against the climate change. We have to do something for fair taxation. A lot of very interesting aims. Everything is reduced to an increase of the tax rates. So it's not reduced to have research and development and then other approaches. What we are in favor of, that we have like this vaccine. The vaccine that didn't come from the government. It's private corporates who invented it. So I do not want a state-planned economy. And what is now going on also in Germany with this movement to the left and the Greens and the social approaches, more and more transfer payment. You get a basic salary, we give you everything, and we have just to tax the rich. But we, small and medium entrepreneurs, we are those who have to pay the bill. We try to point it out with the taxpayers movement and with the European Economic Summit, but I'm not sure that we succeed with this anonymity decision to keep it, because remember last year we thought that the Netherlands and Austria will vote against the debt package, rescue package, Corona package, and at the end they were bought out. They got a special benefit for the Netherlands and for Austria, and they were convinced to vote in this direction. So I do not trust any European politician. I'm happy if Poland or Bulgaria, if we can succeed to convince at least one government to say no to this end of market freedom. And that's, I think, a good campaign. Fight for freedom, fight for tax competition. We will have lots of bullshit against us because if you look to the left-wing movement, they're in favor of these developments, but we have to stand it, we have to fight. We have really to fight for tax freedom, tax competition. Thank you.
Thank you, Michael. We know that you are fighting day after day for this purpose. I'll go back to Mr. Mitchell with a second round of question for him. You're a fighter too, Dan, and you've been and you're still fighting for a smaller government and more individual liberties. So don't you think that the end of tax competition could be the beginning of a new era where the big government is no more state-based, but global-based? So there will be like a global big government.
The left is interested in expanding the size of government for public choice reasons. That's just a description of the economic analysis of political behavior. Politicians are more likely to get votes by buying them with other people's money. And that's what a lot of fiscal policy is nowadays. I don't think that the politicians want global big government for the sake of global big government. They just want to rig the rules so that there's no longer tax competition, and that therefore then gives them greater ability to squeeze more money out of their own domestic populations. As a matter of fact, I would be much more worried about global rules in terms of climate than I would be on global fiscal policy. Even in the European Union, they haven't been able to really make a lot of progress in terms of European-wide taxes and spending. It's still limited to just a little bit over 1% of GDP. But none of that changes the fact that whether or not government expands because of domestic politicians or whether government expands because of global efforts and new supranational institutions, the point that's relevant from an economic perspective is that bigger government will lead to slower economic growth. It will reduce the prosperity of people. And keep in mind, by the way, that one of the driving forces for all this bad policy is demographic change. The politicians are aware, at least many of them, that their populations are aging and that birth rates are falling. And when you have welfare states that are largely tax and transfer systems from younger people to older people, when you have more and more old people and fewer young people, that's a recipe for a fiscal catastrophe. And we're already seeing some evidence of this in many countries around the world. The Greek fiscal crisis, in part, was driven by this tax and transfer welfare state, the math no longer working. Well, those same demographic factors apply to all of our countries. In some cases, there in Rome, Italy has some very serious demographic issues, but the same is true. Bulgaria has it, Austria has it, the United States has it, the Nordic countries have it. politicians are looking at these long-run numbers, these long-run demographic shifts, the fiscal consequences of those long-run demographic shifts, and they realize that they only have two options. One option, which would be very good, they could reform the welfare state, move more toward personal self-funding, personal responsibility, or they can figure out, well, maybe if we agree to set up global tax cartels, we can make it possible to squeeze even more money out of our people, and that will prop up the welfare state and keep it going for another 10 or 15 years. The problem with that approach, in addition to making people poorer and making government bigger, is that it ultimately doesn't work. The demographic forces, that's math. You can't deny it. You can't stick your head in the sand. There's only so much money you can squeeze out of the private sector. And with these demographic changes, ultimately, the only thing that will work is the entitlement reform, the self-funding, the shift toward free market policy. And what worries me, though, is that the politicians in the short run, their incentive is to try to go with bad policy, not good policy. And by the time you get to a situation where the only possible solution is good policy, they will have destroyed the economy so badly that we could really see some very negative things in terms of social chaos, disarray, rioting. It's a very, very grim situation that we're facing if politicians go down this path of global tax cartels.
Yeah, thank you. Don't you think, like somebody mentioned it before, I think it was Mr. Stanchev, that some big companies are like playing the same game of are siding with the government in the implementation of this global minimum tax? Are they trying to protect their own businesses, and are they afraid of competition?
When you're looking at the reaction of big companies to the G7's proposed global tax cartel, I think there are several factors that go into the corporate decision-making process. First, they're just worried about, I guess, reputational issues, so that if they make a big show that, oh, we're good corporate citizens and we believe in a global minimum tax, they say that because they don't want people protesting outside their stores or protesting at their annual stockholder meetings, things like that. So that's one possible explanation for corporate behavior. But of course, I think the point that was made is completely correct, that these companies figure that if there's a global tax cartel, they're very big. They know how to maneuver in the when dealing with government officials. They know how to get special deals by using their economic clout and political fundraising clout. And they figure if small businesses wind up getting hurt, that just means less competition for them. But then there's also a technical wonky issue here that we haven't addressed, which is that the entire G7 argument of supposed non-payment of corporate taxes is largely nonsensical, because governments, national governments, already have complete control over what is called transfer pricing rules. So that if you're in, say, Sweden, and you think that Google or Starbucks or Facebook or any big company isn't paying the proper amount of tax, that they're somehow shifting profits to Ireland or Bermuda or something like that, well, your government already has the ability to say, okay, our transfer pricing rules have been too generous. We're going to change that rule because we think that you're under declaring profits. So this whole myth, this whole nonsensical idea that companies get away scot-free, to the only extent to which is true, it's because national governments are explicitly adopting policies that allow them to do that. So don't create a global tax cartel. If you really think that Google's not paying enough tax in country A, then the politicians in country A should change their own transfer pricing rules and not get in bed with other governments around the world to try to create a global tax cartel. But why are they going with that approach instead of fixing their own national policy? Because as I already described, this is simply a scheme for politicians to take more money out of the productive sector of the economy so they can prop up their welfare states, but ultimately that's going to be a self-defeating approach because they're going to kill the economy and they can't change the demographic trends by taxing and spending more.
Thank you, Dan. Thank you, Dan, for the points you raised. Mr. Stanchev, before I go back to you, I would like to hear more from Anders. I saw that you, Anders, were agreeing with Dan about the country regulation, the way a country should, regulate better maybe or less their own big companies in order to not make them to not make capital fly away. Do you agree?
No, that's a misconceived idea that companies doesn't pay taxes. If you look at the figures, the tax revenues for corporate income taxes have been quite stable since many decades. I think I looked in the OECD statistics average. It has been roughly 10% since 1965, so of total tax revenues. So the tax revenues from corporate income taxes has not, they are not losing tax revenues. Still, they talk about this race to the bottom with lower tax rates, statutory taxes, but the tax revenues have been stable. So I think this whole idea about the big corporations are getting away with their taxes is a misconceived idea. And this goes to the second part of this G7 idea. It's not only abolish tax competition, it's also to move tax base from countries where value is created to countries where the sales are mostly based. And that's also a really bad idea because it's, of course, very complicated to decide where is the value created. Is it created where you build Bavarian cars, or is it where you buy Bavarian cars? Is it where French wine is produced, or where you open a French wine bottle? My idea is that both wine and Bavarian cars, they are created a value in Bavaria and in France. But I think that idea from the G7 that the value is created at point of consumption, that's a totally misconceived idea. If countries want to tax consumption, at least in the European Union, we have VAT. It's easy for the countries. We have a minimum VAT, but if you want to tax wine, French wine, you could introduce a higher VAT on that. So that's not complicated. So the idea to try to move tax base from countries with, for instance, like Austria and Sweden, with a successive export industry and move that tax base to France, that's a very bad idea in many ways. And it's also, countries could compete not only with tax regulation, can also compete with better infrastructure and education and so on. But if you move the tax base to point of consumption, then it's no idea to do a better business climate in countries. So that's also another why it's important to use the veto that countries like Poland, Hungary, Austria, Sweden, who are against. I will tell you that Sweden is strongly against, both the business community and actually the social democratic government is against this idea to have corporate income tax based on sales and not where value is created.
Thank you, Anders. Mr. Stanchev, I know that you will add something more. You will comment something already said
Two
by
brief
our
remarks,
guests.
if I may.
Yes, of course. You should.
So if you look at the global data, the highest corporate tax revenue in state budgets are in countries like Venezuela and Cuba. Why? Because they have the entire industry state-owned. And that's why, the tax revenues from corporate tax revenues are very high. For normal countries, as percentage of GDP is much lower. So, and another point, there was an attempt 7 years ago, the point was raised by the president of Kazakhstan. His name was Nazarbayev. So he was afraid of the Russian ruble after they created this Eurasian Union. And he raised the point of creating a global currency, which is different from the dollar, which basically for him, was different from the ruble. So UN created a task force in 2015, and they spent, I don't know how many months of efforts, and this task force is still working on the global currency. So this will not fly with the global cartel, but it creates lots of problems on national level. So Bulgaria as a flat tax jurisdiction, has been stable, for the last 13 years or so, with no idea of changing the system, which is completely flat, with no tax exemptions, no non-taxable base, and that sort of stuff. So, but currently, after this debate in England, you have Bulgarian socialists and some other political parties, the trade unions, started campaigning again, about abolishing the flat tax altogether, or amending it to make it more progressive and that sort of stuff. So the problem is local.
Thank you, Mr. Stanchev. Michael, you would like to add something to the discussion?
Yeah, I think we all agree that this is the end of free market economy. And we have the choice. Do we want state-planned economy with increasing debts, or are we in favor of market economy? And I will fight until the end of my life for free market society and freedom. And there we need also tax competition. And it was already mentioned, to guarantee, to ensure fair tax competition, we do not need to harmonize the tax rates. So that's for me to summarize what I know, and it's good to hear it again, but that's the message. To have fair tax competition doesn't mean that you have to have minimum tax rates worldwide. So that's what we have to try to communicate, and also to convince at least one single country in Europe not to vote for a tax cartel. Otherwise, we will see the result. And I'm strongly believing if the US, maybe Dan can tell us something about it, if the US will see that it's going in the wrong direction, I think this will be the first big player jumping out of such an agreement, because taxation is also a national topic. It's a location factor. And if you want to attract money, give the investors good conditions, and such conditions are low tax rates too. Thank you.
Thank you, Michael. Dan, are the US going in the wrong direction, as Michael said?
The Biden administration, especially with Janet Yellen at the Treasury Department, in some sense is being very logical. Biden wants to raise the corporate tax rate up to 28%, which when you add in state corporate taxes, our corporate tax burden would once again be the highest in the world. Now, Joe Biden might not know a lot about tax policy, might not know a lot about economics, but Janet Yellen's no dummy. And she realizes, okay, if we put our corporate tax rate up this high, we're going to lose jobs and investment. But maybe we won't lose as many jobs and we won't suffer as big of a drop in investment if we can somehow get other countries to agree to do similarly bad policies. And if we can not only get other countries to do the same bad policies, but if we can set up a global tax cartel, that then gives us more leeway to raise taxes in the future and to extend the tax cartel to other types of revenue. So within the narrow confines of sort of this statist ideology, what Biden and Janet Yellen are doing makes a lot of sense. Now, does that mean the United States is bad on this issue? No, it simply means that the current Biden administration is bad on this issue. It's an open question how this thing is going to proceed. Will it get blocked in the European Union because of a national veto? Hopefully that would kill it. But if that doesn't happen, if countries like Ireland and Cyprus get bought off somehow, okay, what happens then? Would the United States Congress have to somehow give approval to this global tax cartel? Well, Republicans and Democrats are split 50-50 in their control of the Senate. One would have to imagine that with longstanding belief in national sovereignty in the United States, that Republicans would unanimously be against the global tax cartel, and all then that would be required would be a handful of Democrats, or even just one Democrat, to join Republicans in voting no. But here's my concern. I don't want to make it seem like this thing will be easy to block. My concern is that there will be the use of what's called soft power to push this initiative. So if the United States and Germany and Japan and a few other big countries that are on the wrong side of this issue, if they start in effect using their economic weight to bully smaller jurisdictions, then maybe they could achieve, the statists could achieve their policy objectives without a formal agreement, signed by 180 countries around the world or something like that. So I think obviously we need to make sure that we fight this on every possible front, using every possible tool at our disposal. But let's not trick ourselves or deceive ourselves. Simply blocking it at the European Union level, or simply getting the US Senate to vote against it, assuming it ever comes up for a vote, that doesn't kill the idea. I mean, let's look at what the OECD has done over the last 20 years in terms of going after tax competition. We sometimes stop them when they're trying to do A, and then we stop them when they're trying to do B. But then, while we're paying attention to A and B, they do something really bad with C. So you have all these bureaucrats around the world, all these finance ministries and treasury departments. They're all controlled by hard left bureaucrats who don't like tax competition. And it's very, very difficult for our side to try to sort of put out all the different fires and to fight all the different battles. So it's going to be a permanent fight for the rest of our lives. Why? Because the politicians and the bureaucrats know that there's no way they can prop up the current welfare states unless they get their hands on a lot more money. And so we just have to continue fighting and just realize that this battle will never end.
Thank you, Dan. Unfortunately, we're running out of time. Maybe Barbara would like to give a final remark before, yeah.
Well, thank you, Giacomo. Thank you for hosting us today, and thanks to all our speakers for sharing their know-how and their insights, and also for pointing out what is in danger, not only at first, but also what we might face in the future if we don't have a close look at numbers and figures and compare those, and if we don't think, or if we forget about the advantages of free individuals and free enterprise. I think this is the common solution, that if we want to create wealth and a good life for everybody, then we need to create an environment for enterprises and for entrepreneurs to live and survive and to compete on all fronts, not only with their products and ideas and goods, but also for business locations. And finally, let me once again remind you of our publications. And we are working on new publications, as you mentioned, Giacomo, Anders Ydstedt, and also Michael Jäger and our team are working on a publication with regards to digital taxation and the disadvantages of that. But again, this book has it down there. And I think all the speakers that you've seen today have already argued back then that international tax competition is the race to the bottom in case of taxes, and the race to growth in case of individual freedom and well-being. So thank you. Without further ado, the European Resource Bank meeting edition of this today is closed. And thanks to our host and speakers. Looking forward to seeing you again.